Good morning, everybody. It's Friday, September 22nd, 5:28 a.m. Central Time. Grain markets just a little bit higher this morning. Fairly quiet overnight trade. Matt Bennett and Mackenzie, good morning. Guys, let's start off with the soybean market, which posted some fresh lows yesterday.
Yep, the nearby November contract fell below the $13 mark and traded at its lowest level since early August. Seasonal pressure, river issues, and poor weekly export sales data were likely responsible for the sell off. Calendar spreads continue to soften. The November January spread traded a carry of 17.5 cents yesterday, a new low for the year.
What do you make of the weakness in the soybean market, Matt? I know a lot of people have been friendly to the soybean market. We've got a pretty tight looking domestic situation on paper, at least. Yet at the same time, export demand has been kind of lackluster. I don't have a clue what the yields are going to be. What do you think?
A couple things. Yeah, domestically, we're extremely tight. From a world standpoint, we're not. I mean, it's a different story. There's no doubt that we've got enough beans to get by, first of all. Second of all, forecast just for normal size crops from the USDA has Brazil, going up, 7 million tons or something like that.
Yeah.
Argentina, of course, probably doubling what they did last year, which was an absolute train wreck. But, another thing is I feel like a lot of these early bean yields have been pleasantly surprising. I know that there's a lot of analysts out there throwing stuff, and maybe they're talking their position. I don't know. Bottom line is, you hear a lot of different stories. My personal customers, my farm, early yields have been better than expected. Now, you would think later yields might kind of fall off given how dry we were late in the year. But right now, I think that harvest pressure, you name it, there's just not a whole lot going for the bean market right now.
I mentioned yesterday, and I had a chart about how Brazilian production continues to expand at like a breakneck pace, and Chinese imports, Chinese usage has kind of stagnated to some degree. And Brazil has this natural freight advantage shipping beans to China. It just seems like this export thing is problematic. Let's jump to the sales, which were kind of disappointing.
So, U.S. corn export sales declined last week. Net corn sales of 566,900 metric tons for the current marketing year were at the low end of expectations and down 25% compared to the previous week. Japan was the largest corn buyer. Net soybean sales of 434,100 metric tons were down 38% versus the prior week and well below traders' expectations. China was the largest soybean buyer for the week. Net wheat sales of 307,700 metric tons were down 30% from the previous week and 20% from the prior 4-week average.
So everything was below expectations, and China is still buying beans. It's just like feels like they're buying like minimal amounts. Like they're not doing anything that's going to get the market excited.
Yeah, and it doesn't really feel like they're going to get too carried away as you suggested. I mean, I think this has kind of been coming on for a while, and you hear more talks about their economy not necessarily getting any jump start, so to speak. They've had definitely lackluster news over the last year, but I guess moving forward, a couple of things come to mind. Yes, we've got the promise, if you will, of more plants coming online here in the U.S., but I'll tell you what, we're rapidly coming into an era, in my opinion, where exports are going to be lower and we're going to have to be using more beans domestically, if we're going to continue with a tight carry out. But that's just kind of how I see it playing out. I think it's going to be some rough waters at times, transitioning into more of a domestic usage situation.
Let me run some statistics by you here. Accumulated corn sales for the current marketing year are running 6% behind the same period last year. USDA is projecting that corn exports are going to increase by 23% this year. So USDA, it's very, very early and things can change. But as it stands right now, a lot of people believe that USDA is overstating corn exports. Soybean sales are even worse. Sales for the current marketing year are down 34% versus the same period last year. USDA is projecting for the entire year a decline of only 10%. Wheat sales accumulated are the worst in more than 20 years. We got the worst book of sales since at least 2001, I believe. We're down 17% versus the same period last year. USDA is looking for a decline of only 8%. So it's early, very early in the marketing year for corn and soybeans, but we're not even close to where we need to be or should be right now. Things could change, and maybe the market's job right now is to find a price that stimulates export demand. Does that make sense?
Yeah, I mean, do you have any good news, Joe? Like, gee,
No,
Christmas. This is like kind of rough. No, I'm with
sorry.
you. I mean, bottom line is, what are you going to do? You run prices sky high, and what's that do? I mean, high prices fix high prices, and you see demand go down, supply increase. I mean, heck, the U.S. farmer's not the only person that was making money over the last 2 to 3 years. Everyone else was too. So, what everybody want to do? Expand. And so, right now, what you've got to get to, as you say, you've got to get to a price that's going to stimulate demand. And the thing is frustrating right now, of course, is that you can't, you're not going to be able to float a full barge down the Mississippi River. So that's an issue for beans right now. Later on for corn, I mean, it's going to be. We really need to see this weather change. It'd be kind of interesting. Maybe the only bullish news I can give you right now, Joe, is weather. I mean, we're going to finish up awfully dry here, and boy, it's hot and dry in Brazil. So if that trend continues, maybe it would get the market at least some life.
Yeah, we're getting to the point where we will be talking about South American weather in the podcast here very shortly. We did have a flash sale yesterday. I guess this is good news.
We sure did. U.S. exporters sold 137,160 metric tons of corn to Mexico. Of the total, 121,920 metric tons is for delivery during the current marketing year, and the remaining 15,240 metric tons is for delivery during the 2024-2025 marketing year.
This is Mexico is the buyer you got. They're not the one that you want necessarily. I mean, Mexico's old reliable. China was the bright new shiny object that could really move the market, but China just hasn't been interested at all in U.S. corn.
No, I mean, Chinese business has been the one thing that I've told people could change, the entire trajectory of this corn
And
market.
really quickly, too, it could change it.
Absolutely. They could come in and, if we saw a big rally like earlier this week, Joe, Tuesday and one Monday and Tuesday. I mean, in my opinion, you're sitting here thinking, what's driving the market? And anytime you see a market rally like that and you don't have an explanation for it after 19, 20, 21 time, feel like, well, maybe China's coming in buying some corn. We just don't know it yet, because we don't know it whenever they actually buy it. We know it when it's announced. And so one of these days, maybe that's what we're going to see. I mean, maybe China will come in and buy U.S. corn. If they do, that 6% behind, whenever they're forecasting a 23% increase, those numbers can change rather rapidly.
If it does happen and China comes in and buys corn, U.S. corn in a material amount, you'll see corn up 15, 20 cents one day, and you look around and you won't see a reason, and you'll hear some chatter about purchases. Then you'll see the flash sales a day or two later. That's the way it'll work if it happens, and that's the optimistic view that will happen. We have no signs of that just yet by any means.
Correct.
A group of organizations representing the clean fuel industry sent a letter to the Biden administration this week. The letter urged the administration to use an updated method to measure emissions to ensure biofuel producers are eligible for SAF tax credits. The letter acknowledged the billions of dollars biofuel producers have invested to ramp up SAF production. The future of SAF, according to the letter, depends on new technologies and feedstocks from American agriculture.
So the groups involved here, American Soybean Association, Clean Fuels Alliance America, NOPA, U.S. Canola Association. Lobbyists are going to lobby. They're lobbying, and they're kind of crying poor here. They're saying, "Oh gosh, if you don't, this ruling doesn't go in our favor, we're going to lose all these billions of dollars." And that's not actually the case. If this ruling goes their way in terms of the way emissions are treated when it comes to these subsidies, yeah, it'll be favorable to them. But if this ruling goes the wrong way, and I don't think it will, but if it does, it's not gonna kill SAF. I still think SAF is gonna be a big deal, and we need it, Matt.
Oh, absolutely. I mean, that's one thing I've said all along is, renewable is an exciting thing for sure, renewable diesel. But if you really want to get excited about potential usage as far as how many gallons we could end up boiling through, it'd be SAF even more so by a substantial margin than renewable, first of all. Second of all, kind of be the savior for the ethanol industry, in my opinion. I mean, I'm not saying ethanol is going down. It's just a stagnant, kind of mature industry that certainly growth is not something that you see, in the future. Now, SAF, absolutely, you could see some growth, and this would be huge, not only for the folks that are lobbying, but obviously for producers. And so, man, you've got to hope that that's the direction we're going. But I don't think it'll absolutely kill it. I'm the same as you. They'll just have to find a different way to go about business, and they may not be able to grow as rapidly as what they thought they would.
Paul Neefer, who's a regular contributor here, who's my quick plug for the day, ran through all of this in detail. There are some things actually you as a farmer should be doing right now to benefit from this. A lot of the carbon intensity score from the ethanol plant, a lot of it is the corn that comes from the farmer. And as a farmer, your carbon intensity score is going to tie into the ethanol plant's carbon intensity score. So this is actually really important for you guys if you're a farmer. This is not something that just the ethanol plants are going to have to deal with by any means.
So USDA released weekly drought monitor data yesterday. The majority of the Corn Belt experienced cooler temperatures this week. However, drier than normal conditions continued to plague the region. Drought conditions intensified across Indiana and central Illinois. Central and southern Minnesota also saw conditions worsen, which spread into northeastern Iowa and southwestern Wisconsin. Drought conditions across the plains were mostly unchanged on the week, except for worsening conditions in eastern Nebraska. When we look at the percentage of U.S. areas experiencing drought, corn country 58%, soybeans 53%, winter wheat 47%, spring wheat 59%, and cattle country 45%.
Matt, let me ask you, we talk about weather all the time. Let me ask you a grain marketing question. This year, we had a crop scare event in June, had a big rally in corn prices. Corn, you could, as a farmer, you could go price corn at levels that are associated with a great deal of profitability. And people, to a significant degree, farmers were afraid to make the sales because they thought the market was going higher because of drought. They thought that they weren't going to produce the bushels. Is this year going to be a sign of things to come in the future where a drought just isn't as big of a deal as it used to be, and that if you get these dry weather rallies, like they need to be sold? Is that what this means now?
I believe so, because genetics have changed so much. Now, the thing is, of course, 2012 was one of those years where it was very similar to this year, other than the fact that it never rained, And so, if you're the producer and you're sitting here, then you need to be a little more creative, maybe, than just physical sales. Because I know a lot of folks that made physical sales all the way into that rally in 2012, and it didn't end up raining. And the unfortunate thing is, if they got oversold and they had corn sold at 5.50, and 6, they had to buy it back at $8. And so, I do think that rallies like this should be sold more so than what they were in the past. It's just I want to be creative in how I do it at times and not get terribly carried away as far as how I'm going to true myself up with physical bushels, because that can be a pretty painful process. But yeah, I agree with you. It's just it needs to be approached carefully.
Yeah, I don't know what the answer is, but dry weather seems to be not as, if these yields are as big as advertised, if the crop is as big as advertised, as what the government's telling us, and I know a lot of people think it is not. Maybe it's a game changer when it comes to marketing. I don't know. I mean, generally speaking, crop scare events are made to be sold anyways. We do have some rain on the radar this morning, which is helpful. I just don't think that I don't think that this forecast, like a lot of these rains, are going to kind of miss these river valley areas. And so many of these areas are so dry. I don't know if the runoff's going to be there. The river is still like not where it needs to be. I think that to go back to that soybean spread chart we had in the first section here, these river issues are a big driver of the widening of these spreads.
Oh, absolutely. I mean, there's no doubt. I mean, this is the time for bean exports to shine. Obviously, demand in the interior is going to be very strong whenever the river's trying to pull all the bushels they can possibly get to the river. And unfortunate reality right now is that everybody's kind of in a holding pattern. If you'd moved that last weather chart east, half a state, in Mississippi River Valley would be getting substantial rainfall, as you suggest. I mean, you can't really count on your tributaries feeding the system whenever everyone's freaking dry as a bone. I mean, you're just not going to get much runoff. And so we really need to see this river situation get better if you want to see this extremely tight situation be supportive towards the bean market and to bean spreads in any way.
Seems like very near term, the river might be a bigger deal for beans. Like our export program is very much like what some people would say front loaded. Like we do the majority of our bean shipping like directly after harvest, whereas corn is more so like first quarter of the following year. So maybe that's the biggest thing in the bean market right now is the river, the export implications, that sort of thing. I think yesterday we did have some outside pressure
Yeah,
for a
we
lot of different reasons.
definitely did. The stock market declined for the third consecutive day on Thursday. Stocks plummeted as Treasury yields jumped to multi-year highs. The Dow Jones declined 1.1%. The S&P 500 fell 1.6%, and the Nasdaq lost 1.8%. The rate on the U.S. 2-year and 10-year Treasury notes reached their highest levels since 2006 and 2007, respectively. The increase was due to weekly jobless claims falling to their lowest level since January. Stock market losses were also fueled by concerns over a possible government shutdown.
Government's always going to shut down, I guess. Matt, this all ties back to interest rates, which are going to stay higher for longer the way that it looks. We know that this is a concern and a big issue for farmers. Farming is such a capital intensive business. Guys borrow a ton of money. What are the biggest concerns specifically about interest rates that you're hearing?
Well, I mean, overall, I think that you're going to see this land market cool off a little bit. That's not my biggest concern. That's just the first thing that came to my mind. I do think that, some of these 20,000 plus sales, those are going to have to be done with cash for the most part because, Joe, you can't pay 8-9% on ground that costs that. I mean, heck, that's an old day cash rent payment, 20,000. I mean, you're talking what, $180 and, in interest alone. I mean, I don't know. The main thing that's concerning though, the folks that I talk to is that obviously the cost to operate is going to be very expensive. Now, I don't know that everyone's as worried about 24. I think what they're worried about is that if profit margins are down at 24 and we're not so laden with cash moving forward, it could be pretty rough because you look back to the big rally 2012 and 15 through 19 sucked. I mean, it did for everyone. And so if you had a 4 or 5 year stretch where income's significantly lower and interest rates are higher, I think that that's what's going to really be tough on the farm sector.
Here's what I see right now, very short term. I had Shay on yesterday, and we ran a survey. We asked subscribers what percent of this year's corn and soybean crops do they have sold. The survey response said that the average farmer had, I think it was like 43% of those crops forward priced. Shay and I agree that the real number is probably lower than that. It's probably like a third. So you've got 2/3 of the corn and soybean crops out there unpriced that will go into storage. And what's the strategy going to be that you and I discussed? The most popular strategy, right or wrong, will be hold and hope. You will put it in the bin. And the bad thing about that is, yeah, you can hold and hope for higher prices, and you may very well be right. But at the same time, you're paying interest whether the market goes up or down.
Absolutely. Yeah, that's one thing that I've always told folks, I mean, you and I talked about, for instance, selling it and re-yelling it in some way. I know a lot of folks like to do stuff like that. Some years it works good. A lot of years, especially in a carry market, it doesn't work so hot. But
Yeah.
I think what it boils down to is this, Joe. If I sell today for, let's say $4.50, I'd sell the elevator. I re-own it. Maybe I spend 20 cents on a strategy. I know 430 is the worst case scenario that I can have. The unfortunate reality is that if we store it, whether it's commercially or at home, for instance, if it's commercially, you're going to pay storage where the market goes up, down, or sideways. I mean, that's just the bad thing about it. Because if the market goes down, you still have 25, 30 cents to get out past the first year. That's going to be a tough pill to swallow. If it's stored at home, it's different. I like having physical ownership in this situation. It gives you a little more flexibility. You can do more with it from a strategy standpoint, but you're absolutely right. Storing it doesn't necessarily mean you're going to get more for it later, and you got to understand that.
Mackenzie, is the cattle market over?
Seems like it. It has been a rough week. So cattle futures, feeders closed down an average of 231 lower. Live cattle futures closed an average of $1.80 lower. We've definitely hit a ceiling. We do have a cattle on feed report coming out today. Cattle on feed as of September 1st is estimated at 97.7% compared to last year. Placements during August are projected to be 93.3% versus last year. And marketings during August are expected to be 94.4% of year-ago levels. That report's going to be released this afternoon at 2 o'clock Central Time.
Matt, was that the top, or is this just another correction?
Well, I mean, one thing that comes to mind, for instance, Kinsey, I mean, you say it feels like it's dead, but I mean, aren't you glad you're looking like, for instance, out to April and you're still 197, 198? I mean,
Yeah.
yeah. And so I guess you got to stop and think. I've said all along, I think that you could drive this thing to $200. Obviously, we got within a quarter of it, My thought, Joe, though, I guess is more of a concern for those that are buying $3 and three and a quarter feeders, because I know that's going on out in the cash market. And if we're not paying attention to the fact that this fat market seems to be stalling out, I think protection is an absolute necessity. Cattle producer's gone out on faith for his whole career. This is maybe not the time to do that. It's just my personal opinion, but I guess I'm not as bullish as what I've been for months. You know that I have been, Joe, and I don't know that I'm bullish today.
For those of you guys in the cattle business, if you're looking at risk management, the LRP deal is something that should absolutely be considered. Has the boxed beef market topped? Because I think it's come down like since Labor Day or so.
It has definitely topped. I think at the end of the day, demand is a serious issue. And Matt, what are your thoughts on all of that?
Yeah, I mean, I'm the same way. I think the thing that scares me about demand overall, is we just talked about interest rates, right? And I do think that people are going to wake up, and say, "Holy crap!" Maybe I need to back away from the steak a little bit and go towards a pork chop or a hamburger, if you will. And I just think that conversation is going to be going on. I think that we're in a precarious time. I do think we hit 200 at some point. I think the market wants to go there. I think it will. But at the same time, we have to remember, Joe, the things that you and Kinsey and I have talked about the last several weeks, is that your cattle on feed numbers will be excessively low. Well, that's no secret. And it's a futures market. And I think that people have tried to run out ahead of this thing. And what's on the other side of 200? How much upside is there at 200? And I got to think that it's fairly limited. But that's just my opinion once again.
Outside markets this morning, guys. U.S. dollars up a little bit. Stocks are up a little bit after a big sell-off yesterday. Bonds are mixed. Crude oil's up 78 cents in the December WTI, 89.10. Everybody have a great weekend. Matt, Mackenzie, thank you for joining me. We'll talk to you guys Monday.